Hey, good morning, everybody. Yeah, it's been a long day. It's 7:30. It has been. I've been in like 3 meetings, but you know when you take your coffee and you put Rockstar into it. Yeah. So anyways, hey, good morning, everybody. How you doing? Sir, yes, sir. Nice and warm in Atlanta, Georgia. Summer is here. Rains every day. Rains every night. I have turtles laying eggs all over my yard. I have geese all over my yard with little babies. Deer, egrets, heron, big blue heron the other day. So living the wild. So anyways, yeah, snakes, yeah, somewhere. Not a problem, but you know, I live on water, so it can be a problem just because there's life close to water, you know. So, but it hasn't been too much of a problem. But the kids know to leave it alone and go get dad, just in case. So anyways, hey, let me remind you that trading is risky, not appropriate for everyone. Past performance, good or bad, is not necessarily indicative of future results. Stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. You know, one thing that we do have that's probably the most dangerous is just like poison plants. We have like poison ivy, creeping jenny, poison oak, poison... I think there's one more. But anyways, I had people over working on the yard, doing sort of like spring cleaning and stuff. It was actually heavy work. But anyways, at the end of the day, the guy was done, and he's like, I think I got poison ivy on me. And he takes off his shirt, and his back looks like someone put boiling oil all over it. I'm like, no, looks fine here. You should leave. Here's your money. No, I don't know. Yeah. Maybe you should go now. Actually, truth be told, I knew it was going to happen once I saw him working, and I'm like, oh, he's got poison ivy on him. So I sent my wife to the store and had her buy the kind of ointment and stuff you put on it to help the itching, to dry out the poison and all that kind of stuff. I'm like, look, I know it's going to be $20 for a tube. Just go get it for him. And when he was done, I'm like, here, man, just take this. So anyways, hey, my name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com. Nice to see you. Here 7:30 in the morning, Monday through Friday, here at Forex.Today for you. Thank you for being a loyal client and companion every single day as we go through this journey called Forex. Let me check, make sure Windows hasn't changed the recording levels. No, it should be fine. Good. Wow. Windows didn't automatically screw something up for me. Cool. Life is great, life is grand, and life is good. So if you don't have an account, please visit TradersWay.com today. So I got to bring this back up. Hang on. Whoop. And this has got to come back up. Whoop. All right. So what do you think here? What do you see, brother? Wow, medium slate blue. I was going to try a different color, dark gray maybe. That's not too bad. So not a lot of movement, but I think at one point we were doing something like this, right? I think we were acknowledging something like that at some point, and that is now then continued again. Would that be true? Like that. But I want to zoom in to what's happened now. Okay? When you look at this chart here, would you assume institutional traders are using pivot points? Like when you see that, is that random, or do people know, are they worried exactly about 18.32? I mean, it's your interpretation, right? So I don't like to try to force my opinions and points of view down your throat or through your ears. So if you were sitting here observing this, because this is what I do, or did, or whatever, I still do, but I've always done it because I'm self-taught, I would look at things and try to observe them. I don't try to like remember what other people do or what other guys' theories are. I just look at it and say, what's going on here? Why did they behave? Why did market participants behave the way they did? How should I observe or behave this in the future? And so, you know, it's a giant guess because nobody knows. You're talking about potentially 10,000, 100,000 different market participants. We don't really know. Okay, maybe there wasn't a lot of conviction and they simply got out at a double bottom, which is okay. But I think if you connect that bottom to that bottom, it's not precise. So I'm like, yeah, for some people, maybe the close of this giant bearish engulfing candle stopped because of this bottom, right? Okay, yeah, maybe for some that was that. And then I look at this bottom and I say, well, maybe for many it was also the pivot point. Okay. Well, Art says big level of supply. Well, why? You know, why? That's the bigger question. What's going on? And so we're trying to, you know, why is there supply there? Why not supply somewhere else? By supply, it's just orders, right? So maybe it's this double bottom, but I think even more people use this weekly pivot. So you could say, well, you have price action support, but you also have market force support. Okay. Notice this. If you're a swing trader, if you took a swing trading course, you sold there and your target's here. That's an amazing coincidence too. Maybe that's what was going on. Now, if you were trading this lower high, and we know this is actually, you could call it a triple top or a lower high after a double top. So some people may be just looking at this as a sloping market, and they would assume at some point that it's going to break to the downside. I wouldn't assume such a thing. And that's also from observation of market in the past. What I've seen in the past is that if you're down here on Monday, you should take profit. It's a lot less likely to fall. because it moved, it did the full Monty quickly, right? There's just, once you've done the full Monty, there's no second act, right? That's your closer. If you opened up with your, if you opened up with your big, with your funniest joke, it's all downhill from there, right? So anyways, some may say this goes back to here. Others may want it to head back to this zone and sell. Maybe some just said, look, it's my Mexican peso monthly trade. You sold here, you put your target here, and you're done for the month. Okay, that's plausible. If you believe, now let's go on to another one. If you believe this is a bigger trend, then you want to play the monthlies, don't you? Okay. What's that trend? Your target now let's just call it 118. Oh, sorry, 18. Just call it 18. If you're going to stay in this until July, this is your target. Right? Any thoughts, questions, concerns, comments? Love it, hate it, don't get it, got it? I get it, I got it. I know it's good. My rhymes are tight. You wish you could. So that's for you to decide. Look, we were at 22. A friend of mine bought real estate in Mexico right around here. Smarty pants, huh? Well, what I did is I got rid of my my weeklies. But what I said, here is, can you see my little Skype thing pop up in the corner? Right? All right. So if Vladimir Putin pings me, it's going to be a problem. All right. Well, okay. So what I was saying is if you were just doing a weekly trade. See, I don't know what your trade plan was. And I don't know what the outcome is either. So this is why you need to make decisions. And I tell you, sometimes the peso trade lasts 2 days. Sometimes it's 2 weeks. Right? If you'd done the peso trade in January, you could still be short. So, right? So, I don't know what your plan is. 2 days, a week, or 2 weeks, a full month, 2 months, 3 months. I don't know what your plan is, right? If you were considering it just a swing trade, a weekly swing trade, M3 to M1, you're done. You're done. You're spending your money already, right? Holy frijoles! Yo quiero dinero, right? You're done. But for others, you might be you might be going for the target for June. Not the target for the first week in June. You might be going for the lows for the month of June. Because American investors are investing overseas. Or not overseas, just over borders. America's too expensive. So money is going to other places. How'd you like to put the money into Mexico and earn 6%? Huh? Sounds great to me. So when's the time? Well, we already discussed all of this long ago. America's too expensive. What are you going to do when you rebalance? You get, let's say you have a big portfolio of stock. You kill your losers. You take some profit off your winners. Now you have some dry powder. And you're like, well, I don't want to reinvest. I don't want to buy more Apple stock. Maybe I'll get into Mexico. Maybe I'll buy a Dutch company or invest into it in Mercedes and Porsche and Volkswagen. BMW. Damn, there's some good cars in Germany, huh? I mean, what are you going to do? I was thinking about buying Ford or lending Ford money or both. But here's my problem with Ford, GM, and was it Fiat Chrysler? Most of these, I think all these companies have put a ton of money into the truck business, which was a great trend 5 years ago. 5 years before that, it was a bad trend because gasoline prices were so high. People couldn't wait to get rid of their Hummers, right? And their SUVs, suddenly they wanted little cars, right? So anyway, so it's like 5 years ago, but that's what they're building for the next 5 years. I don't know, Hojo, don't ask me. Why don't you put more money in your account and give them a call and say, I want a higher swap. I put, $100,000 in. But if you have $500 in your account, don't worry about it. There's no carry anyways. Right? Right? I'm not being angry. I'm just like, dude, don't worry about it. Yeah, you got to pay for the server somehow, right? So let's see, TradersWay is making, 9 cents on every time, 9 cents per trade on the 3 trades you make a day. No, I know, Hojo, and I hope my answer isn't hostile, but I don't know. But, it's funny, and a lot of small traders worry about such things, right? I'm like, well, dude, I'm sorry, but your 42 cents a day revenue doesn't pay for a lot, right? So a broker needs a way to cover bills, kind of thing. But I'll tell you what, and this probably would, I'm not even sure, I haven't talked to TradersWay about this, but I'm sure any broker, this is what I do with any broker. I'd like to put $1 million into an account, but I want to do it so I could catch high yield. So I want to negotiate with you. I don't even really care about the spread. Normal spread for a VIP client, that's fine, which would be tiny anyways. But I want the full carry. And I'll work with you, or I'll talk to these 2 other brokers, and really I just want to buy, I want to buy Kiwi Yen and I want the full carry. And they'll say, well, every time you pull the trigger and you put in $1 million account, you know, what's the fee for that? $200 a trade or something? Okay, now they can afford to give you the full carry, right? So, anyways, that's what I'm just saying. That's how you do it. Right? Yeah. I'm sure any broker would do that. You're like, wow, really? But I think the world is always open to negotiation. It never hurts to ask. Okay. Beep, beep, beep. There are a lot of Mercedes, yeah. A lot of high-end Mercedes means, yeah. Yeah, I used to have an AMG 55 Cabriolet. Nice car. I still have my license plate. I wonder if there's even one on here with the license plate on it. Oh, I'd have to look forever. Maybe I have it. I think I have it in the closet right here. That's real. See, May 2014. Yeah, black AMG 55 Cabriolet. Damn, it was a nice car. Anyways. I have another one back from my venture capital days. You guys get that one? Yeah, it's back from my venture capital days. I know. All right. I know, what a goofball. Got some questions about the yens? Yeah. Well, let's start with USD yen, and then we'll go around the circle. So let's go to 15-minute chart. So yesterday, I said it would either fall from here and head down, head up a little higher, then head down, or really go way up here and then head down. Don't you love it when you have, like, it's essentially one plan. It's just like one of these resistance is going to hold and then it will fall. But it's going to fall. It's either going to fall from here, here, or here. These two are the most likely, right? So that's yesterday. So it's fallen from 110.5 to 109.25. So, you know, there's 100 pips in there for you. You're welcome. Yeah, nope, nobody sent me cigars. I know, nobody. It's a real shame. What a shame. Okay, so let's go to my other setup. Stupid Windows. Man, it's incredible. There. Let's go. Let's go. Nobody sends me cigars anymore. All right. Risk off. Dude, risk off. It's the same thing that we talked about 3-4 weeks ago. It's just risk off. Okay? Money coming out of the United States is another big one. Well, Wharton's at Penn, right? I thought I mentioned Penn. Yeah, Wharton's fine. It's good. It's a good business school. I don't know anything else about that. But, all right, you went to Wharton. All right, Trump went to Wharton. Look what it got you. Right, so Joe says, oh, well, for non-U.S. residents, the Penn stuff isn't very clear. That's my point. Somebody said, you know, why Harvard or something like that? Because it's sort of like the undisputed champion of the world. It's like, oh, I have a degree from University of Pennsylvania. I went to the Wharton Business School. All right, that's really good. You're like, no, you have an MBA from Wharton? That's really good. Mention it to a guy in India, and he's like, right? And you're like, that's it. I mean, he doesn't know. Is Wharton good? Never heard of it. Then you're like, no, I got my MBA from Harvard. Oh, well, that's just the best in the world. So that's why. You know, I'm not going because I want to. I'm surprised they let me in, to be honest with you. So I look at it as sort of, you have to do it. I'm doing it for you. If you know, what kind of idiot would say no, right? Like, oh, I got accepted at Harvard now, but it conflicts with Dancing with the Stars, and, you know, so I had to, like, pass on that. It's a big pass, right? Then I realized it's probably an honor to drop out, and they're like, why don't I just drop out? I've been accepted into an elite program at Harvard for executives. Great, I should join, do it, and then drop out. And I'm like, yeah, I dropped out. It just wasn't living up to my needs. So anyways, all right, let's go. Little risk off here. So we were talking about this with, maybe it was Pacer or something, but check this out, bro. On a Monday or a Tuesday, if you achieve the target for the week, okay? Now, bear in mind, bulls would have bought here. Okay? Okay? Right? Now, I would have said, well, first of all, it's euro. Do you remember the euro taking off? Like, people were really in on it, huh? And I can't quite remember, but it seems to me we were kind of laughing about this. Like it was overblown or something. I can't remember that. But I remember the feeling like, yeah, euro's going way up. You can have it. Right? You can have that one, world. Hey, world, you want that euro? By all means, buy it up. So whatever the language was, I kind of remember the feeling more than the language. So you didn't have to be a bull. But I'll tell you what, you certainly could have been a bull here. And look, you would have lost money. That's why they invented stop losses, right? But look at this. On a Monday or Tuesday, you hit the target. Now, my observation over 10 or 15 years of doing this is that when you hit that on Monday or Tuesday, very often, not always, very often it comes back to at least here. Not necessarily here, right? But at least back to the circle, which happened, which then forms a lower high. Okay, now we're at the same price as here, but now we're here after the lower high. If you took my swing trading course, self-promotion, and you were bear, see, that's the thing. If you look at your charts to make a decision, you're already failed. How many times have you heard me say that? If you're looking for answers here, you've already failed. Maybe I didn't say it that way, but I say it different ways all the time. Maybe this one will grab, maybe the next one will grab, maybe one in the past will grab. You said don't chase the price. Yeah, don't chase price, but it's not even that. Like, this is especially true for swing traders. And I know I drilled it home for them. You make decisions, and then the market gives you prices. If it gives you the right price, you can consider buying or selling. And if the market agrees with you in the near term, over the course of the next few days, you will either get, if it agrees with you, you will get paid. If it disagrees with you, you'll lose a little bit of money. It's a big key concept of swing trading. The market doesn't tell you anything. You have to bring alpha or you're worthless as a swing trader. You don't have any alpha, so you're just beta. Beta is just the market, so what are you? I don't know. Right now, you have to make decisions. Are you a bull or a bear? If you get that right, it's not even getting that right. There is no right or wrong. If the market agrees with you in the short run, you will make a fair amount of money. You'll be fairly right. But if the market now disagrees with you on your timing, because the price is price. Price is always right. So wherever you sold it, it was resistance if you sold it. So you're right. You did your analysis. That's what your analysis is for. That's what the chart's for. Where's the support? Where's the resistance? Where's a good place to sell? Where's a good place to buy? So, once again, that's factual. So, if the market agrees with your analysis and you trade the way you're supposed to, which again is that part's easy because you know what you're doing, right? So you sell at resistance in a downtrend, and you'll probably make money. I mean, literally, the probability of making money is higher than the probability of you losing money. And because of your analysis, your stops are smaller than your targets, right? So you're probably right. You'll probably make money, and you'll make more money than you're risking. And you're winning most of the time. So your losses are oh man, I got that one wrong. And it's nothing. Water off a duck's back. Right? So that's the cusp here. So let me delete this now. Okay? If you bought here, you lost money. Right? If you bought here, it's not a very good price. Maybe you're playing the weekly, but that's very aggressive. After a lower high, probably not wise to be aggressive, but in that case, you lost money again. Now, because you're aggressive, your stop's down here. On this one, your stop's here. So you got this way wrong. You were really aggressive on the upside, and it probably didn't. It probably wasn't a good idea with the lower high after double top. So I don't know what made you so aggressive there, but you took a shot and you failed. See, I would look at this and say it's not even trending, right? So to be aggressive here, but others would play the other way. They sold in here, their stops here, okay? Risking essentially the same amount of money, and their target's here. Now, you could take profit on this support, and that's fine too. You're ultra conservative. That's all right. Timmy, yeah, actually, yeah. Yeah. Have you been to Forex.Today, Timmy? Timorama. Timster. The Timster Union. Timbo. Making copies. Watching videos. Tim doesn't answer. Yeah. Tim Dalton. 007. 007 pips. Yeah, go to Forex.Today, man. Okay. Let me show you something. Let me show you a secret, but don't tell anybody. Shh. See, the webinar might be slowing me down. Yeah, way down, huh? It's not the site, it's my PC. There we go. Little slow. Okay. If you go over here, that gets you to the, right? Gets you to the most recent webinar, which is yesterday. If you click my name, for example, hallelujah, you could do it this way, and you should click follow. Now, I can't follow myself, okay? But if you click follow, when I finally upload my video each day, you'll get a little notification. Okay? So it'll say, hey, Wayne just uploaded his video. So the cool thing about, or one of the cool things about Forex.Today is you go through the analysis, and I know you must read at least 10 trade plans a day and leave comments and likes and give feedback. You can click and follow your favorite authors and customize your experience. Yeah. Anything for you, Timmy? All right, so anyways, there's a nice move. And now, if this makes a lower low, next week might be like this. Whoa! So yeah, we got to think ahead. The only problem with that, you know, if you go through the YouTube thing, I think there's like a 1 or 2 day delay about me uploading a new video, or like today's video. I think you'll find out like by Friday it'll say, oh, you should watch the new video from 4 days ago. But if you subscribe or follow me on Forex.Today, it'll tell you instantly, boom, Wayne just posted a new video. Okay. Life is great, life is grand, and life is good. Oh, I see what's going on. Okay. Life is great. Okay, we done that one, did that one. All C. So my problem is that with this one, I guess I need to zoom in. Since this is so precise as a weekly R1, my target now is weekly S1. And we're almost there, okay? So I have to scale back some tolerance. But, you know, if it's going to make a lower low, I don't have to be on it. I could always catch the next drag. And then what I'm trying to do is line this support pivot up with that in here. Let me put it back in. You see? They're pretty similar, aren't they? So it might do something like this, but it might not. I'm not convinced of that. Okay? That's what the analysis tells me. Beast. It's got a little more trend in it. Sell. 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 So in summer school, in the bundle that I'm creating, one of the things you'll get is a price action course. What price action is the idea of trading price as it kicks off role reversals is one way of looking at it. I think there's 5 or 6 videos on it. So that'll be part of your summer school, about 5 hours of price action. I don't think it's 5 hours. Probably 5 videos, 3 hours probably. Okay? Very, very basic price action. Right? And if you don't get it, what used to be support became resistance in the future. What was support became resistance in the future. What was support became resistance in the future. And I'm predicting what was support will become resistance in the future. Right? You got it? Make sense? Cool, right? Cool beans. Does anybody not trade with price action? Yeah, Pedro, we covered that last week, about I think Wednesday or Thursday of last week. And then I think we did it again in the NFP based on relative strength. But bear in mind, when Kiwi yen was falling, we picked that out as something that was mispriced, and even though Kiwi yen was weak, we suggested it was going the wrong way before it got strong. Yeah. So anyways, here's our beast. I think this was another pair where I said, this is way, 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 way up. Do not be shocked if it comes all the way back down by summer, by the end of summer. You got to lose yourself in the music the moment you own it. You better never let it go. You only have one shot to not miss your chance to glow, because opportunity comes once in a lifetime. Yo! Just I felt the need to do that. I'm sorry. Okay. Our friend the kitty cat. Let's see. Since oil came down from $55 a barrel, which we predicted, have you been a bull or a bear? Probably a bear. Swing traders. Okay. This was their sell zone last week, and their target was here. If they did again off the new monthly pivot, it's plausible. You had to be aggressive, but in this case, at least you're selling in a trend. Maybe you should be aggressive. And if that's the case, this is the conservative target for the week. It may go a little farther down, but the probability is it wouldn't be much farther. So you need to decide, do you try to stick your neck out and pick up the rest of the pips? So right now you're at 81.10. This might go all the way down to, right, 80.84. So what is that? Maybe 30 pips plus a psych level stuck in there, right? So it's 25 pips. Okay, you're up 100. How badly do you need the other 25 pips? You got to lose yourself in the trade. That's what you're hoping for on the small time frame. Melissa says, yes, stay conservative on this, but you can always stay conservative, right? The thing is, if you're aggressive in the entry, should you be aggressive in the target? If you took the risk and sold at the PP, at the central pivot point, then maybe, you know, you should be going for S2. Because you took the risk, now you need to get paid. More risk, more pay. Otherwise, why did you take the risk? But the argument to that is you can't go broke taking 100 pips out of the market, right? Another way that I look at it is, what's the likelihood it pulls back 25 pips? Yeah, Alyssa, maybe take the summer school when I launch that. Yeah, and you know, I might have to do a quick journey out of the country, so, which I hadn't planned on, but I might have to leave like in a couple of days, so I might have to I might have to work all night and do the summer school thing for you guys. I don't know. I have to find time. That's wonderful. So anyways, what's the chance of this coming back 25 pips? Extremely high. Because that's what it should do, right? Right? So, and what are the chances it falls? Let's clear that up. What are the chances that it falls to this area here? Bear in mind, there's a psych level here. So you got support, support, and then your aggressive target. What are the chances it does all of that? Blows through first support, conservative support, blows through the psych level, dips all the way down, and hits this. So now your probability, right? So like the pullback's probably what? At least 1 out of 2. But this might be 1 out of 5, right? To get through all of that? %50 versus 20%? So someone might just say, why don't you just split the difference, take your profit here, and go away? What'd you do all morning? I took profit. Then you ask the other guy, what did you do all morning? Well, it went up, and then it came back down, but then it double bottomed up to here, but then it came down, and then okay. So here's the moment of truth. It's supposed to fall there. If you're using 1 minute. What about this? 15-minute chart has a different story. You're like, well, wait, that's 50 or 60 pips, not 25 now. So you're going to risk a 50 or 60 pip pullback because you might make another 25 pips. You're willing to risk 60 to maybe make 25. You see what I mean? So I call that the law of averages. Don't look at it simply as this trade. Look at it as like over a course of 100 trades. Okay? Over a course of 100 trades, What's the likelihood it does this versus, basically this? $50-50, maybe? And if that's the case, wouldn't you be paid exactly the same if you just simply got out here every time? It turns out to be the same. It's not quite true though, because this may only give you an extra 25 or 30, and this you're risking 50. So you're actually making more money getting out here over 100 trades, because these bigger pullbacks cost you a lot more than if you hang on, right? And if you hang on through the 50, then you got to hang on through the 50 down and the other, right? So now you got to hang on through the 50 pip pullback and then a 75 pip extension. How long does that take? Three, 4 hours? 2 hours up, 3 hours down, maybe? Any thoughts, guys? This is a 15-minute chart. I'd say a 2-hour Stokes cycle up, 3 hours Stokes cycle down. Okay? Because if you go back and look, these Stokes cycles are 2 hours. Counter trend, longer trend. Okay? So, right? Well, it'd be 7 or 8 one way and 8 to 12 the other, maybe, right? So anyways, how much is that worth to you? And then lastly, if you do hang on, isn't this also a scenario? Of course, Hayden, it's risk off. Terrorists running around London. London pulling out of the EU. Elections in the UK. Like, where does that say invest? So don't say that pound just got weak. Dude, it's been weak for a while. Okay? And then watch what happens after the election. But anyways. So anyways, I think the chance of this is reasonable too, guys. I think over 100 trades, there are going to be times when this happens. Would anybody agree with that? Ryan's saying maybe now 50% of the time, or 50% of the 50%. Right? So now it's like 25% chance of it coming down here, 25% chance of it completely reversing, and 25% of up, down, and then up, which means now you got to be in it for 12 hours to lose money. You getting what I'm driving home here? That in the long run, if you have a long-term point of view for your trading, you can just take your profit here and work 8 to 12 hours less, but you might you might miss the opportunity here. And this is what an amateur cries about. Oh, if I'd only stayed here. Well, if you didn't stay and you didn't have a plan, you didn't analyze the risk, right? And what an amateur never says is, oh, look, if I stayed in, I would have lost money. But they weren't in it anyways, right? So on the law of averages, if you just took your profit, you work a lot less. You work a lot less. And you make more money. Now you might give up opportunity cost here, but you're also giving up risk here, and you're saying at least 50% of the time you're going to be accepting risk, but you don't like risk. So, you know, this is an obvious sell on Monday or Tuesday, right? Anyone that took the swing course knows that. I mean, a pivot cluster monthly and weekly, and you're already bearish? I mean, my God, right? And you know that this is the target. You just decide now, are you going to take the profit here, or are you going to take the profit here? But you knew this on Monday or even Sunday. So what do you want to do, bro? You should be like, dude, I'm done. And of course, now you could be a cheeky monkey, and this adds to the analysis, right? Is it possible that we do this now and end Friday up here? Well, that's actually what's predicted. It's actually, when you look at this as a swing trader, that's your assumption, in fact. Yeah, it might head down and hit 80. Yeah, it could. But the assumption now is by the end of the week, it'll be at the weekly central. Again, a swing trader knows this. It's just like, oh, it's Tuesday. Oh, right? It just jumps out at you. Oh my God, I got to take some profit here because it's probably going all the way back. And there's no way I'm going to have a 100 pip profit and then watch it dwindle based on hope all the way back to zero. I'd rather die than break even on that trade. Because I make 125. Oh, 125 pips. What a big man. No, just like, right? Play it. If you're hitting your target on a Monday or a Tuesday, oy vey, right? But you have to know these things. If you don't know these things, then you're sitting there and you're like, yeah, I might go down further. Or even worse, you're not even asking yourself these questions. You're just like, I don't know what's going on. I don't know what's going on. Right? I'm so confused. Right? Okay, this has daily, weekly, and monthly. Oh, snap. So, talk to me, Goose. What do you see? You should already know. No. We are on our way to 76. That's what I see. That's you saw that too, right? I mean, you should know that in less than 3 seconds. There's a lot of lines here, but see, you should know what to look for. So look at that, I'm like, oh, we're going to 76. Okay. That was what we knew last week, and this was the setup for Sunday. Okay. So you can see on Sunday the actual entries here. Okay. Then we get the lower low. How do you trade a lower low? Off the central pivot. Okay. Right? And then what should it do? Now we don't know how long this will continue, but you think it would head down. It's just, I'm just going to pick an area. And then what? It's going to come up. And then what? Kick off the roll reversal. Do you remember price action? This is why I said you're going to need to learn this in the summer school. Scalping, spot, swing, price action. You're going to have to watch. Funny thing is, there may be, like I said, 20 or 30 or 40 hours of videos. The sad but true thing is you're probably going to have to watch it 2 or 3 times, all of them. You're going to probably do them all. I guess you could do it in 3 weeks, but you're going to have to do it again in July and probably again in August. And you need to be ready by September to know how to do all these things. Do your analysis, to set up trades, to set up swings. That's like somewhere between 100 and 150 hours you're going to need to dedicate to learn how to trade in the next 100 days. That's an hour a day, right? Hour and a half a day? Please. Yeah. Yeah, at least you don't have to at least you don't have to move to another city for 3 weeks and leave your spouse and your children at home. So anyways, there's the ends, bro. Yeah, well, I guess we'll just leave it there, huh? Remember, Thursday's the big day for volatility. So, you know, when you see that we've hit key levels, okay, you should always assume support and resistance will hold. Support and resistance always, 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 always holds. And you should assume it will always hold until it breaks. But that's important. I know it's a little funny, but it's important. If you assume support and resistance won't hold, then why do you think it's support and resistance? If you look at it, you're like, oh, that's support. Well, then it will hold, always. If it breaks, you're like, oh my God, it broke. And then you come up with maybe a breakout strategy. You see what I mean? But you don't assume the break. You assume it will hold. Like our conversation today on this one. Now, your choice on this one is which support. Well, that's never easy. And there's no consistency. The market will sometimes do this. The market will sometimes do this. The market sometimes will do other things. But you're the bastion of consistency, aren't you? Right? The bastion of consistency, or the bastard of the market? I don't know. There's a book title in there somewhere. Great t-shirt, right? Market bastard. So anyways, peace on earth. May the pips be with you. May your profits be above average. And I'll see you tomorrow. Oh, look. Paying the penalty. Not knowing what's going on. Risking the money and losing the pips. Should have taken profit. Yeah. I'll see you guys tomorrow. Thank you very much for being on my team, and thank you very much for being a client of TradersWay. Hey, you new guys? There's quite a few new people here. You know, show some loyalty and respect. Open up an account at TradersWay, even a demo. TradersWay.com. You get into the private office. Takes maybe 30 seconds to open up a demo account. It's not much to ask. If I'm giving you an hour and a half a day, 30 seconds once isn't a big deal, right? And then we'll get you posting trade plans. Don't worry about that. Melissa said, already got a demo, already opened a live account 2 months ago. See? Good people. If you're new here, you're with good people. This is your family and your trading team. Get involved. Don't be a lurker, huh? The more you get involved, the faster you're going to learn. That's true. So anyway, see you tomorrow, guys.